What is up, guys? I'm back yet again with another one. Today, I'll be talking about order flow at key points of interest. All right. So what is a key point of interest? A key point of interest is basically an area where you want to look to buy or sell the market. Okay, so that's your resistance area, obviously, for your sells, right? Your support areas, obviously, for your buys, right? Your trend line touches, if you're a trend line trader, of which I'm not, I hate them so much, right? So, okay, if you're a trend line trader, you know you're looking to buy or sell at these specific key points of interest, all right? Okay, and then we also have order blocks, right? Order blocks are key points of interest because we look to buy or sell in them. All right, so let's get straight into it. What is order flow? Order flow is basically price movement that obeys the Doe theory. I know someone out there is wondering, what the hell is the Doe theory? What is this guy talking about? Okay, the Doe theory is one in which that states that price will continue trending in a specific direction until a preceding structure break. Okay, so I'm going to make an illustration of a downtrend real quick, all right? So we all know that a downtrend is characterized by lower lows and lower highs, right? Lower highs, lower lows. Okay, cool. So this is a high, this is a lower high, this is a lower high, this is a low, this is a lower low, this is a lower low. This is a healthy downtrend, all right? And this is following all the rules of the Doe theory that states that until there is a structure break, price will continue trending, okay? So until something like this happens, all right, this is a structure break, guys. Why is this a structure break? Because this high was taken out. So now the Doe theory has been breached. So we can't really say we are in a downtrend anymore because the rules have been breached. Okay, so I just want you to understand this. I don't know if you can take a screenshot of this little drawing or whatever, because I just want you to have like a mind map, right, of this scenario of having healthy order flow that is breached going forward. Okay, all right, let's clear all this stuff and let's get straight into the charts, right? Okay, so on this chart, I can spot a buying order block. All right, why is this an order block? Because on the H1, we can see that this red opposing candle was preceded, right, by this impulsive move, right, making this an order block. I think I made a video on order blocks. So, you know, if you don't really understand what an order block is, it would be really nice for you to research on that stuff, because order blocks are very efficient and they're very, very, very profitable. Okay, so this is an order block, making this a key point of interest. You know, we mark this area, and then when price returned, we want to see if we can make some sniper entries in here. I'm a sniper entry trader, no drawdown, right? So we want to see if we make sniper entries in here, assessing the order flow into this area. Okay, this will be looking for buys. So when price comes into this area, it should be following a healthy downtrend order flow. We only look to enter when that order flow has been breached, when the Doe theory has been breached, to say, oh no, the trend is changing. Instead of selling, we're now buying. That's when we want to look at entering the market. Okay, so let's go into the lower time frames. You know me, M15, M5, even M1. A big misconception is thinking that M1 doesn't matter. I make my entries right there. You know, I don't want to see drawdown. You know, it just takes you to be organized and to actually study how the markets move for you to start killing these things on a daily basis. All right. Okay, so we have our order block region in here, higher time frame order block region. We're now on the M5. We want to see if there's a disruption in order flow, right? So this is healthy order flow. Why? We have lower highs, we have lower lows, everything is rosy. But what I do see is there is a structure break. Sorry about that, guys. Let me just do this. There is a structure break right here. Okay, wow. So our healthy order flow has been disrupted. How ironic is it that our order flow has been disrupted only after we have reached our key point of interest where we're looking to make buy entries. Imagine that. So we are anticipating buys, and then order flow into the key point of interest is disrupted. The Doe theory is confused. It's like, oh no, we're not in a downtrend anymore. So this is the first sign. Guys, repeat. I want you to understand something, okay? Please do not make entries before an order flow disruption. There's no point, you lose your money, okay? Things need to shape up like this before you execute. You mark your key point of interest, you assess the order flow into the key point of interest, you wait for the door theory to be breached, and then we want to be making entries, okay? Right. So here it is, we have our structure break. This structure, this high was taken out and price came back and failed to make a low, okay? A lower low, sorry. So this is a low right here. And then now we have a higher low all of a sudden. We can clearly see that things are not, our rules are not being obeyed, right? And then, funny enough, after that, we even have another structure break. Clearly, price has changed direction. It has shifted now, and we are now in a bullish order flow. So now how do we make our entries? After the first break of structure, so this is the structure point, here's the first break. I want you to make sure price does not take out the preceding low. If it doesn't, you wait for the second structure break. Understand this. Always wait for the second structure break, because that's where your entries will be. When price breaks the second structure, I want you to always look for an institutional candle responsible for the break in that structure. Okay, because that will be our entry, our sniper entry trade. Okay, so obviously you can see in this region here, right? We have this institutional candle here, right? Price broke it, right? Impulsively, and it came back and it just wicked, right? Now the order flow is bullish. And I want you to see something here. The more we go, the flow is bullish, we start seeing the same thing repeat itself, right? We have another structure break here. We have another structure break here, okay? We locate the IC candle, the institutional candle responsible for the structure break, which is this one, all right? And look, our entries are right here as well. This goes on and on and on and on again until we also find a selling point of interest and the reverse happens, okay? So this is basically just going to help you with your entries to say, I have a buying key point of interest. We have healthy downtrend order flow. We have a structure break. We failed to make a lower low. We have another structure break. Now we're looking for institutional candles in here to see if we can enter the market. Another break of structure here. We look for an institutional candle. Price has to come back to the institutional candle that is responsible for the break, and we join along with the healthy order flow. The order flow has changed from this selling order flow. Now we're buying. The market does this the whole time. This is how you get sniper entries with zero drawdown aligned to them. You see, today I'm going to do something special. I'm actually going to share with you, stuff I've been doing. I'm going to show you entries that I made so that you know that this is actual stuff. This is not just gimmicks of just rewinding an old chart and saying, okay, I'm a smart ass, okay? This is actually whereby we're looking at things that have happened, and I have the proof to show you that these are entries that I was actually just making all week. Sniper entries, zero drawdown. We capitalize. We need to make money. We need to expose ourselves less to risk. Okay, let's just move on to another chart. All right. Let's see. I think we have V10 here. So if you're on V10, let me just remove all these drawings. Okay. So on the volatility 10 on the daily chart, you can see that price has been bullish, for the past, I don't know how many days, if not even a month, okay? Let's see if we can find key points of interest to take trades. This is definitely a daily order block, right? So this would be a daily buying order block. Why? Because we have this red opposing candle that was followed by these two impulsive candles, making this an order block. So let's scale down to the lower time frames to see how we would have entered this market. Now that we have found our daily order block, we want to be on the low time frames. I'm even going to go to the M15 even. Let's see our order flow being disrupted. All right. So remember, it's all about order flow. So price is definitely trending very strongly here. You can't even nicely see the lower lows and the lower highs, but obviously this is a healthy downtrend, right? And then we have this high here, which is taken out. Okay, so this right here we start getting alert right here. Why are we getting alert? Because our Dow theory states that price will always be trending until a structure break, okay? So this high has been taken out, and then we look to see to ourselves, all right, which candle is responsible for taking out this high, okay? And this is our institutional candle here. I just hope what I'm doing is actually clear. You know what I'm saying? Okay. So healthy downtrend order flow, everything is okay. And then we have this structure break right here. We find our institutional candle that is responsible for this structure break, and it's this one here, all right? We can punish the market right here, enter the market, and we can go, right? But that would be a more experienced entry. I would say stick to the M5. Let's look at order flow on the M5 rather, okay? Right. So once again, like I said, we are coming in and there's this healthy downtrend order flow, right? And then this structure is taken out. Let's do this. This structure point is taken out. And now to show you that this trend is so strong, right? This trend is so strong. It did not even come back to an institutional candle after taking this out. In fact, the order flow just continued, right? Now we're looking for higher structure breaks and returns to the institutional candles so that we can assess the situation and enter the market. Here's another structure break, and I would say this is an institutional candle return, and voila, we're there, we're in the market. Okay, all right. So that's basically it, guys. You know, I hope I make sense. You know, I just want to be able to show you that if you can assess, like do your homework, there's no harm in being organized, right? I feel as if when it comes to things that are not lucrative, people are so organized, but to things that can actually change the story for you, right? You know, people simply aren't organized, right? So in a nutshell, in this video, in this brief session, what I just want you to understand is you want to pinpoint a key point of interest where you're either selling or buying the market, right? And then you assess order flow going into that area. When there's a disruption, the Dow theory is disrupted, you get alert. When you start seeing structure breaks and returns to institutional candles, you make your entry. Okay. I'm going to show you an example. I think there's a trade I took today at 3 a.m. All right. Okay. How can we do this? Let's just make this a bit smaller so that you can see. Okay, great. Obviously, real account here. I was up at 3 a.m. I couldn't sleep today. And what did we have? So we have our key point of interest here marked by this orange zone. I spotted order flow. This was healthy order flow the whole way, right? Until I see this high. This high was taken out. Let's draw, let's draw, let's draw, let's draw, let's draw, let's draw. Ooh, where are we? Where are we? Okay, cool. So I see this high here. This high, it is taken out by this impulsive move, right? And then what do we have? We have this institutional candle responsible for that. And then this high, all right, is taken out by this move. So we just wait for price to come back to the institutional candle, right? So this was the institutional candle mitigation, i.e. return of it. And I placed my entry right here, right? And then the market went and went and went. Look at the stop loss, guys. Look at the stop loss and just look at the reward, you know? That's how we want to be trading. And like I always say, obviously, this is a real account. And this week as well, I was catching all these trades same way, really. And I told you I don't do signals, but I have a group with all my friends where I just share my trades with my homies only, obviously. And these are entries that I was making the whole week, guys. Look, same thing I've been trying to tell you, breaks of structure, institutional candle somewhere here. I enter the market, punish, zero drawdown stuff, zero drawdown stuff. The whole way, look at this, same thing here. Break of structure, this structure, institutional candle mitigation. Obviously, there will be a key point of interest, okay? There's a key point of interest, a higher time frame one, right? That is involved in the back. So I've analyzed on my chart, on my laptop, and then now I'm on my phone having fun. Entry again, right? The whole week, we're just punishing. Look at these entries. And if you can see any drawdown, please let me know. Same thing, same story the whole time. Another one. Another one. This one is a sell example. M1, 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 M1. All right. So these are all things that I'll be sharing with the boys on the group. You know, we kill the markets the whole time. Look at this stuff, the whole time. So whoa, look at this one. This was crazy. I remember this step index trade. It just went on and on and on. Okay. But anyways, that's it for me, guys. You know, like I always say, you can approach me for mentorship. We can do that. I love sharing these things with my students and just helping, being a helping hand, because I know what the struggle is. I struggled a lot with this stuff. But without proper help, you know, trading is that evil thing that you can go for 10 years, you know, in the same spot until you actually seek the actual knowledge that you need for you to become proficient in these markets. Okay. So feel free to let me know if you want mentorship. Just hit me up. You can WhatsApp me and we can take it from there. I also have like a specific packages that, you know, I tailor make everything uniquely, just according to your experience level and stuff. But, you know, those are things we can discuss. My phone number's in the description and all sorts. All right. So that is it from me, guys. Have a good one. Ciao.